Hi, I'm Takoa De Silva with Sprott Global Resource Investments, and I'm sitting down today with James Turk, Director of Gold Money Incorporated. James, good to see you.
Yeah, good to see you, Takoa.
It's a pleasure to have you here, and I think it's quite timely as well with the activities that your team has going with Gold Money Inc., as well as where we are in the gold market. But for context, for the person watching, if they're joining this conversation for the first time or just learning about you, can you tell us a little bit about yourself and your background?
Yeah, I've got 45 years in international banking and finance. I was trained as a banker, but a number of years ago started focusing more on investment management and specifically the area of gold. I've written a couple of books, the most recent one being The Money Bubble, What to Do Before It Pops. And I'm the founder of Gold Money, which we launched back in 2001, which has grown to over 20,000 customers and $1.4 billion of customer assets that we're safeguarding. Precious metals stored in different vaults throughout the world.
Mm-hmm. James, over the past about 10 years now that I've been following your work, I've observed a calling that you seem to have had as far as advocating precious metals and then, of course, building the business of Gold Money.
Yeah.
And I'm wondering, at what point in your career did you become infatuated with the metals, if I could put it that way, and what caused you to...
It was probably when I was a kid, because of what I learned from my parents and my grandparents. My father was born in Austria before the First World War, and my grandparents moved after the First World War looking for new opportunities. So because they went through the hyperinflation after the First World War, I was always attuned to, the features or attributes of, importance of saving money, what sound money was, what purchasing power was. I learned depreciation. I remember my mother explaining to me what depreciation was when I was probably 8 years old. So I've always been focused on it for a long time. Interestingly, I went to university to study international economics, and at the time, this is the 1960s, gold was $35 an ounce, and I learned that when the U.S. government stopped supporting gold at $35, it was going to fall to $7. Instead, the gold price started climbing and made me realize that either gold was very overvalued or what I learned in school was wrong. It turned out what I learned in school was wrong, and re-educated myself, studying Mises, Rothbard, and some of the other writers of the Austrian school. And so by the early 1970s, I pretty much had a good handle as to how the world really worked, and I've continued to build on that through experience and knowledge by extensive reading. That's my passion, reading and collecting books on money and currency. I've got about 3,000 books in my library.
What do you feel were some of the more concerning observations that you had through your career working as an investment banker, looking at the financial system, seeing how it all worked, and understanding, I think, the changes, right, over the last few decades?
Yeah, absolutely. Well, I think one of the most important things is that technology changes everything. And when you look at money and currency, that's definitely true. Yeah, I like to make the point that money doesn't change, in the sense that money, as I see it, does the same thing today it did 1,000 years ago, 100 years ago. It enables us to communicate value, our own subjective view of value, when we go into the marketplace, to fulfill our needs and wants. But when we actually get to transacting, that's currency. So I always like to make the distinction between money on one hand and currency on the other. And currency evolves and changes over time. And again, even in my lifetime, instead of just using cash or checks, in the 1960s, plastic cards started becoming currency. And now we're again evolving into new forms of currency with the internet. And this is something that Gold Money Incorporated is really focusing on through its BitGold division, expanding the opportunities to enable currency to be efficient, low cost, convenient, and safe in global commerce. And the basis, of course, is using not currency based on some government's or someone's promise, but something that's been money for 5,000 years, which of course is gold.
James, I had a moment to chat with you before we got started here with the interview about technology companies and how it's really changing business, and I think maybe user empowerment, if that could be a correct way to describe it, with Airbnb and Uber and things like that. What are you seeing in the Gold Money Inc. business as far as acceptance, embrace globally?
Yeah, I like that term, user empowerment, because that's really what it's all about. And when you look at something like Airbnb, it's now the largest hotel company in the world, and they don't even own a hotel. And so it's, and Uber is the largest, I guess, taxi cab business in the world, and they don't even own a taxi. So the technology is changing some of these old structures, and this is a good thing because the new technologies lower costs, they increase efficiencies, make things more convenient, make things more safe. So we should embrace these new technologies rather than fight them. But if you look back through history, people tend to be comfortable with the status quo, and they're afraid of changes. We've all learned in school the Luddites in Great Britain who broke the cotton mills because they wanted to spin cotton by hand rather than doing it through machines. But you can't stop technology, and you can't stop technology in what they call fintech, financial technology. The internet has changed a lot of things, but it really hasn't changed too much in the financial technology side. And I think that's what we're going to see over the next 5 to 10 years, some significant changes. And I'm hopeful that Gold Money Inc. will have a big role to play in delivering another choice to consumers, a different currency that if consumers want to use it, there's no force. They can choose to use it or not use it. But it's something that I think is going to become more useful simply because of the advantages that it brings with it.
So I would think that you now have particular insight, being a director of Gold Money Inc., as far as the embrace that is occurring on a global basis for people reaching out and voting for a different store of value for their money. What is that telling you about people globally, irrespective of the country or the language they speak?
Yeah, I think we're filling a need. And the reason why I say this is one of the target markets that we're appealing to are the millennials, people who are between 18 and 34 years old. They're having a tough time in this environment with financial repression, with central banks pursuing zero interest rate policies. How are you going to save up the money to make a down payment on a home, or to do other things, or to have money saved up for retirement? When you're building your portfolio, one of the most basic components is to have savings, and then once you have some savings accumulated, maybe start going into investments of different things. So the role of savings is important, and in today's environment, you don't get interest income, and you have the risk of a bank bail-in, particularly in Europe, where we've seen what happened in Cyprus and Greece, and the banks there are still over-leveraged. And the amazing thing, though, is when you make a product available that has advantages and people see its usefulness, they will respond. So over the first 4 months, we've grown from basically nothing on the BitGold side to over 300,000 users. We report the statistics every month to show our growth. And over that first 4-month period, we have grown more rapidly than companies like Uber, Airbnb, Facebook, PayPal, and Twitter, just simply because people like what we have to offer. And this is global. We have customers in over 100 different countries around the globe.
How would you say the idea of gold playing a role in the monetary system, is the idea being considered more closely today by governments, would you say, as compared to maybe 15 or 20 years ago?
Yeah, without any doubt. 15, 20 years ago, the Asian central banks were not big factors, and the Western central banks were distorting gold. Today, the Western central banks are still distorting gold because you see the gold coming out of their vaults. But the Asian central banks are absolutely, acquiring huge amounts of physical metal. Not only the Asian central banks, but Asian individuals as well. So if you look at a country like China, it's probably gone from, very little gold holdings, say 20, 30 years ago, to now probably one of the largest gold holdings of any countries in the world. My colleague Alistair McLeod thinks it's probably 20,000 tons in China, but whether it's 10,000, 15, 20,000, or even more tons of gold, it's become a major player. But it's not just central banks that are, factors. Individuals as well globally are looking at the currencies that they have to use and finding alternatives. There have been over 100 currency collapses since the end of the Second World War. We've seen one, recently in Zimbabwe. Venezuela is in the process of a currency collapse. There are a lot of questions about the high inflation in Argentina and whether that currency is going to collapse. So, people are looking for alternatives. When you're looking for alternatives, inevitably you have to come back to something with a proven track record. And of course, gold and silver have been money for 5,000 years, so that's where you're going to turn.
James, when it comes to those devaluations, the currency hyperinflations, that if a person in the Western world, let's say a resident of the United States, would say to themselves, well, those things happen in faraway countries, third world countries that are not as important or not as great as the U.S., and we won't or can't experience a problem like that. Is there anything that you would present to counter that kind of thinking?
Yeah, we shouldn't fool ourselves. We shouldn't fool ourselves with that kind of thinking, because we can't predict the future and anything can happen. Look at Germany, after the First World War. It was a major industrial power, one of the most highly educated countries in the world, and they went through a hyperinflation. And even in America, the first currency of the country was the continental, and it collapsed in hyperinflation in the 1780s. And one of the reasons why the framers created the Constitution to make a more perfect union was to create a monetary union by using the dollar, which was a silver dollar, as the common currency for the country. And that's why they've put into the Constitution in Article 1, Section 10, that Congress shall have the power to coin money. It doesn't have the power to print money, only to coin money and regulate the value thereof. And when you're coining money, what regulate the value thereof means you're either coining gold or coining silver. So Congress had the power to set the gold-silver ratio to make certain that there was always enough metal in the country, if they chose to stay on a silver standard or go to a gold standard, that there was enough silver or gold by adjusting the ratio to make certain that there was always enough money available for coinage. Very few people understand that today, but that was the intent of the original intent of the framers of the Constitution. So we shouldn't be lulled into thinking it can't happen here, because it's happened in many countries around the world, and it did happen here before. And because we abandoned the wisdom of the framers in 1971, we now have the same system in place as what they did during the time of the continental currency, which ultimately collapsed. And this is one of the themes in the book that John and I explained in terms, the money bubble. The money bubble is that people think that what we're using in commerce is money, but it's not. It's only a money substitute circulating in place of money. Money is gold and silver. Paper and these other things are really just money substitutes. And in my view, the debts are unsustainable in this country. The government will repay its debts, but you're not going to get the purchasing power back that you loaned to the government when you bought that T-bond or that T-bill, because the dollar is going to continue to be debased. That's why the price of gold has risen. At the turn of the century, the previous century, it was $20.67 an ounce. Franklin Roosevelt devalued the dollar, and the price of gold rose to $35. In the late 1960s, early 1970s, rather than devalue the dollar again, Nixon broke the link to gold. But the point is that gold still has the same purchasing power it did throughout. And I like to use the example that an ounce of gold still buys the same amount of crude oil it did 50 years ago. Yeah. Gold is still the standard. We just don't use it as currency anymore until now with BitGold. You have to remember, gold is owned by millions of people across the globe, but there hasn't been any modern day banking technology or apps applied to gold until BitGold came along. And that, I think, creates a significant opportunity for the company, and that's what we're really focusing on. And so far the response has been very, very good, very positive.
Yeah. James, what are your thoughts when you think about businesses like Gold Money Inc. or Bitcoin, forms of maybe a person could call competing currency?
Yes.
What are your thoughts surrounding traditionally used currencies, such as the dollar or other world currencies, the managers of those currencies feeling that maybe there are other competitors coming into the space that maybe they're not comfortable with? Yeah.
Well, again, you can't stop technology. It's going to happen. Even if some countries try to stop the technology, other countries are going to embrace it, which is what most people should be doing, and things will change. The technology raises our standards of living. And in the area of payments, if we can make payments lower cost, safer, more convenient, more efficient, we're creating more opportunities to interact with one another. And that creates more opportunities for commerce, and more opportunities for commerce ends up being that people can raise their standards of living. And just think about what's happening now with the internet. We're sitting here in New Orleans. We can get on our cell phone and communicate with people in China or any other part of the world. And if we had a good means to make payment, I could buy data or have a product shipped and just do it through my cell phone, and the person in China knows that they're paid. And it's an interesting point too, because if you look at some of the existing mechanisms that are trying to circulate on the currency, people are looking backward as to what currency has been rather than forward as to what currency can be. And if you look at the automobile industry as a comparison, the first car looked more like a carriage without a horse. And it was only after a period of time that people realized that they weren't restricted as they were previously, because now with the engine, a combustible engine, they weren't constrained by power and things of that nature. They now could put on a body with a roof, pneumatic tires, and over a period of time, what we could call a car actually emerged out of those inventors' garages. And it's the same thing in currency. By looking at plastic cards circulating as currency on the internet, you're looking backwards as to what currency has been, rather than using the technology that's available today as to what currency can be. And that's why I think BitGold is so important, because what we're doing is we're changing the nature of currency by making the world's oldest money circulate once again as currency, and doing it in a modern way, low cost, convenient, safe, etc.
I'd like to ask you, life lessons, wisdom that you garnered from your parents with their tremendous life experience that they had. Anything stand out in your mind?
Be prudent. Don't get into debt. Save your money. Plan for an uncertain future. One of the things I learned from my parents as a young kid is I was born in 1947. So obviously they had gone through the Great Depression, and they made a very important point, and they said that 25% of the people did very well during the Great Depression. They lived very comfortably, and they weren't really affected by it. 25% of the people got by, but about 50% of the people, was their estimate, did very poorly because they didn't plan for the future. So I've always thought, okay, I got to plan for the future. And when you look at what happened in the Great Depression, the buildings were still there after the collapse, the factories were still there after the collapse. What collapsed were the financial assets. And it gets back to the point that when you look at wealth, it comes in two different forms. You have real things, and then you have financial things. Financial things have counterparty risk. Money I deposit in a bank. If the bank goes under, you can lose your money. T-bills or T-bonds, if the government refuses to pay, you lose your money. But at the end of the day, that farmland is still there. That timberland is still there. And one of the things I've learned over my own experience, I'm 68, so I've seen a lot of cycles, economically speaking. You do have cycles where money flows out of tangible assets into financial, and then out of financial into tangible. And in 2000, that peak, we've seen money basically coming out of financials going into tangibles, and I think that is still underway, because people understand there's a lot of risk today in financial assets. Counterparty risk is high. There's too much debt in the system. The only reason why we're at zero interest rates is because central banks know that governments can't afford to pay a fair rate of interest because they already have too big a debt load. And if you increase the interest rate, that increases the amount of interest expense they have to pay. They're not going to cut back in other areas on their spending. They're going to borrow more. And you then get into a vicious cycle of borrowing and spending, and you ultimately destroy the currency. But the currency is getting destroyed now anyway. It's just being destroyed more slowly than it would be in a hyperinflationary environment.
Any thoughts on the production side of the metal, gold? Seems like a pretty interesting environment we're in at the moment.
Yeah, exactly. I look at it a little differently than some of the mainstream thinking. To me, the gold supply is the 170,000 metric tons that exist in the above ground stock. Gold doesn't disappear. It doesn't get burned up. It doesn't get used up. It's always there. It's not like commodities. It's not like crude oil and soybeans, which get used and disappear and consumed. But gold just gets accumulated. All the gold that's been mined throughout history still exists in this above ground stock. In this above ground stock, about 170,000 metric tons, I call it gold's M3. You know, the dollars have a quantity of money and they call it M1, M2, M3. Well, this above ground stock is gold's M3. And the interesting thing about this is this above ground stock grows by about 1 3/4% per annum. So it follows precisely Milton Friedman's K rule, which he said is to have a sound money, you have to have the money stock grow consistently by the same amount year after year after year. And that's exactly what gold does. It grows by about 1 3/4% per annum year after year after year. It's very consistent, which is why gold preserves purchasing power over long periods of time. You know, why does gold announce that gold today by the same amount of crude oil it did 50 years ago? It's for this reason. So yeah, you know, the way gold is dispersed in the Earth's crust, it's very fortuitous because the technology, as it improves, makes it easier to find gold that's more and more dispersed, and the gold stock still grows at 1 3/4% per annum. It's a shame that college professors don't recognize how simple it is, and that, you know, gold is really the best form of money. That's why it's been money for 5,000 years. And in that sense, keep in mind that it's only since 1971 that we've gone off gold. That's never happened before in history. You know, gold has always been the key underlying element. So we're in uncharted territory. And what would you rather bet on? Something with a 5,000-year history that still preserves purchasing power, or a fiat currency based by politicians and their promises, and have a 40-year history? And what we're seeing today, that history isn't very good, given all of the problems we're having with currencies around the world, given the fact that over 100 different currencies have collapsed around the world since the end of the Second World War. You know, I'll go with gold and I'll go with silver. To me, it just seems very, very logical.
James Turk, Director of Gold Money Incorporated, thanks for sharing your comments with us.
Thanks, Tekoa. It's been really great.